Bitcoin surges above $70,000 after Trump calls on Congress to pass landmark crypto law. Trump just put crypto back at the center of Washington. Bitcoin has surged back above $70,000 as Donald Trump intensifies pressure on Congress to pass one of the most consequential pieces of cryptocurrency legislation ever considered in Washington. The move has reignited hopes that the United States could be approaching a fundamental change in the way digital assets are regulated. But the rally is bigger than Trump alone. Falling US Treasury yields, renewed institutional demand, and the forced liquidation of bearish crypto positions have combined with Washington's regulatory push to propel Bitcoin towards $72,000, turning what had been a difficult year for the world's largest cryptocurrency into one of its sharpest rebounds of 2026. Trump wants Congress to take the next step. Trump used a White House meeting with leading figures from the cryptocurrency industry on August 19th to renew his demand for Congress to advance the Digital Asset Market Clarity Act, better known as the Clarity Act. The legislation is designed to create a comprehensive framework governing how digital assets are treated under American financial law. The significance is difficult to overstate for an industry that has spent years arguing that American cryptocurrency regulation is fragmented, uncertain, and overly dependent on enforcement actions. Among the central questions the legislation attempts to resolve is whether different digital assets should fall primarily under securities law or commodities regulation, where responsibility should sit between the Securities and Exchange Commission and Commodity Futures Trading Commission. Trump has repeatedly framed cryptocurrency policy as part of a larger technological competition. His administration has pledged to make America the crypto capital of the world, while previously establishing a strategic Bitcoin reserve and supporting legislation governing stablecoins. The Clarity Act represents the unfinished part of that agenda. The House has already passed it. Despite the renewed attention surrounding Trump's intervention, the legislation is not beginning from scratch. The U.S. House of Representatives passed H.R. 3633, the Clarity Act, on July 17, 2025, by 294 votes to 134. All 216 Republicans who voted supported the legislation, alongside 78 Democrats, giving it significant bipartisan backing at the time. Supporters argue that a permanent regulatory framework would give companies greater certainty over which rules apply to cryptocurrency businesses, potentially encouraging more exchanges, developers, and financial institutions to operate within the United States rather than move activity elsewhere. The House Financial Services Committee has argued that the framework could simultaneously encourage innovation and strengthen consumer protection. A year after the House vote, Republican lawmakers were still publicly pressing for the legislation to complete its journey through Congress. The problem is the Senate. Why the Clarity Act has become stuck. The Senate went into its August recess without completing action on crypto market structure legislation, turning what once looked like an achievable legislative victory into a substantially more difficult political fight. Senate Majority Leader John Thune has indicated that lawmakers intend to return to the issue after the recess. But disagreements over the structure of the legislation, competition between banks and cryptocurrency companies, and proposed ethics restrictions have complicated negotiations. One of the most politically explosive disputes surrounds Trump's own cryptocurrency interests. Opponents have argued that legislation reshaping the industry should include restrictions preventing senior government officials from benefiting personally from digital assets. That debate has become particularly sensitive because Trump and businesses associated with his family have developed extensive cryptocurrency interests. That does not mean the Clarity Act would automatically enrich Trump, nor does opposition to the bill establish wrongdoing. It does mean that the president's financial relationship with the crypto industry has become part of the political battle surrounding legislation he strongly supports. Bitcoin has broken through $70,000. Markets reacted aggressively as the political pressure intensified. Bitcoin pushed above $70,000 for the first time since early June before extending the move towards roughly $72,000. Ether also climbed, while shares connected to cryptocurrency trading, mining, and digital asset holdings recorded substantial gains. The psychological significance of $70,000 matters because major round number levels can influence both trader behavior and automated positioning. Once Bitcoin broke through resistance that had contained the asset for weeks, traders betting against further gains were increasingly forced to close their positions. That can produce a short squeeze. Bearish traders buy Bitcoin or related contracts to exit losing positions, adding additional buying pressure to a market that is already rising. Billions of dollars of cryptocurrency short positions were reportedly liquidated during the wider move, helping transform a conventional rally into an abrupt breakout. Trump did not cause the rally alone. It would nevertheless be misleading to describe the entire Bitcoin surge as a direct reaction to Trump's comments. Another major catalyst came from the US Treasury market. A move to increase long-term Treasury debt buybacks helped push government bond yields lower, improving the environment for risk-sensitive assets. When bond yields decline, the relative attraction of holding cash and government debt can weaken while speculative and growth-oriented assets become comparatively more appealing. Bitcoin increasingly trades within that wider global liquidity environment, particularly as institutional participation has expanded. Spot Bitcoin exchange-traded funds have also experienced renewed demand, strengthening the argument that the rally involves more than short-term retail speculation. One estimate put recent Bitcoin ETF inflows at more than $500 million during a single session and around $1 billion across the week. Trump's intervention, therefore, appears to have arrived at precisely the moment when several market forces were already moving in Bitcoin's favor. That combination is much more powerful than a political speech on its own. Why the Clarity Act matters to Wall Street. The deeper significance of American crypto legislation is institutional. Bitcoin itself has survived years of regulatory uncertainty. Large banks, asset managers, exchanges, pension managers, and publicly listed corporations face a different problem. They need to know what legal obligations apply before committing substantial amounts of capital or building products around digital assets. Clear definitions could make those decisions easier. The Clarity Act is intended to create rules determining how digital assets and intermediaries are regulated, rather than leaving the boundaries to years of individual enforcement cases and litigation. Whether the final Senate legislation resembles the House bill closely remains uncertain, but the direction of travel matters. Regulation does not necessarily weaken cryptocurrency. For a maturing asset class, credible regulation can actually increase adoption by making participation easier for institutions that previously considered the legal risk unacceptable. That is one reason markets are watching Washington so closely. America is making a strategic crypto bet. Trump's cryptocurrency agenda also stretches beyond Bitcoin prices. In March 2025, the White House established a strategic Bitcoin reserve, using Bitcoin already held by the federal government through criminal or civil asset forfeiture. The administration explicitly portrayed the decision as part of America's attempt to establish leadership in digital assets. 4 months later, Trump signed the Genius Act, creating a federal regulatory framework for payment stablecoins. His administration subsequently published recommendations calling for clearer rules governing digital asset markets and greater American leadership in blockchain technology. The Clarity Act would potentially complete another major part of that regulatory architecture. That gives the current congressional battle consequences far beyond another Bitcoin price cycle. Washington is deciding whether cryptocurrency becomes increasingly integrated into mainstream American finance or continues operating within a partially defined regulatory system. Regulators are moving at the same time. Congress is not acting in isolation. The Commodity Futures Trading Commission has relaunched its Technology Advisory Committee as the Innovation Advisory Committee, with representatives from major traditional finance and cryptocurrency businesses participating. Its inaugural meeting under the new structure was scheduled for August 20th in Washington. That matters because regulatory agencies can reshape significant areas of cryptocurrency policy even while Congress debates legislation. The combination of congressional negotiations, SEC policy changes, CFTC activity, and direct pressure from the White House creates something the cryptocurrency industry has wanted for years. A serious possibility that America's digital asset regulatory structure could finally become more predictable. Whether the resulting rules are favorable to every part of the industry is a different question. Could Bitcoin keep rising? Breaking $70,000 removes one major psychological barrier, but it does not guarantee that Bitcoin has entered another sustained bull market. The asset remains extraordinarily volatile. A rally magnified by short liquidations can reverse quickly once forced buying disappears, and Bitcoin still faces the same macroeconomic forces affecting technology shares and other risk assets. There's also legislative risk. Markets are currently pricing renewed optimism around American cryptocurrency regulation. Yet the Clarity Act has not passed the Senate, and negotiations could still collapse, be delayed, or produce legislation materially different from what the industry wants. That distinction matters. Investors are trading the probability of a more favorable regulatory future rather than legislation that has already become law. What happens next could matter more than $70,000. The immediate question for traders is whether Bitcoin can hold above the $70,000 region after the short squeeze subsides. The much bigger question is what happens in Washington when senators return from recess. If Congress can agree on a cryptocurrency market structure framework acceptable to the White House, the United States could move from years of regulatory confrontation towards something approaching a permanent national rulebook for digital assets. That would not guarantee higher Bitcoin prices. It would, however, remove one of the largest uncertainties hanging over America's cryptocurrency industry and potentially make it easier for institutional capital to move deeper into the market. Bitcoin's return above $70,000 is therefore more than another dramatic line on a price chart. The market is beginning to price a possibility that once looked remote. Cryptocurrency may no longer be fighting Washington from outside the financial system. Under Trump, Washington is actively debating how to bring it further inside, and the outcome of that battle could shape the next era of Bitcoin.